Welcome. In this video, has Zbcn coin broken the downtrend? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. From a broad perspective, it was clearly observable that there had been a major descending trend structure that investors had been closely monitoring for quite some time. This trend had formed as the market was gradually pressured downward from previous peak levels, tested multiple times over the course of time, and each time the price failed to break through, retreating under selling pressure. This situation created a strong perception of resistance in investor psychology, leading to a belief that this line could not be breached. However, such descending trend lines eventually lose their strength, and when the moment of breakout comes, it often leads to significant directional changes. Looking at recent developments, it appears that this long-standing descending trend, which had been suppressing the market, has finally been broken. The price has decisively moved above this trend line, and for the first time, has shown a significant upward move. This development is a highly critical turning point from a technical analysis perspective, because the breakout of such major trends is not just a short-term jump, it also serves as an important structural signal that the market direction is beginning to change. Breaking the trend indicates that the overall market sentiment is starting to shift from bearish to bullish. This can lead to major changes in investor positioning and potentially pave the way for long-term buying pressure. However, there is still an important factor that should not be overlooked. A clear pullback or retest to the broken trend line has not yet occurred. In technical analysis, a retest typically refers to the price revisiting the broken trend line or formation to confirm the move's validity. A return to this level and a bounce from it would serve as strong evidence that the breakout is genuine and that a new trend has indeed begun. If the price corrects downward to this level and encounters strong buying interest, it would be a powerful technical and psychological signal of a sustained uptrend. Rallies that occur without a retest can sometimes be weak and vulnerable to downward reversals. Therefore, the price action following this breakout should be closely monitored. A move toward the broken trend line, consolidation in that area, or even a wick left behind would help establish a healthier structure. This process also creates a key opportunity window for new buyers to enter the market. Many technical traders prefer to wait for a retest and respond to the price reaction there rather than jumping in immediately after the breakout. This serves as a crucial filter to determine whether the trend is likely to be sustainable. On the other hand, whether this breakout was supported by volume is also highly important. If the upward trend break occurred with strong volume, it suggests that the buying pressure is institutional and robust. A breakout lacking volume, however, may cause investors to remain cautious, as in such cases, the price might slip back below the broken trend line, signaling a possible bull trap. But if the current price has moved above this descending trend line both technically and structurally and is beginning to hold above it, this may be a clear sign that the direction has changed. In conclusion, the major descending trend that had been pulling the price down for a long time has finally been breached. While this breakout offers major technical relief for a healthier bullish scenario, it is critically important that the price pulls back to test the trend line. If a retest occurs, it not only increases technical reliability, but also helps restore confidence among buyers. Therefore, upcoming price action should be closely watched, potential retest scenarios should be taken into account, and investment decisions should be shaped accordingly. If this retest results in a strong reaction, we may witness the beginning of a much stronger and more sustained upward trend in the coming days. But we must remember that analyzing trends alone is not enough. Other metrics must also be considered. Stay tuned. From a short-term perspective, one of the most notable structures emerging on the chart is the Elliott wave theory. This theory is a well-established and disciplined analytical method that aims to explain the psychological cycles inherent in price movements. It particularly suggests that markets move in waves, consisting of 5 main impulse waves, followed by 3 corrective waves. Currently, the price action on the chart appears to be closely aligned with this theoretical structure. Especially when evaluated on a short-term scale, it strongly appears that the price is currently within the third wave of this 5-wave structure. In Elliott wave theory, the third wave is often known as the strongest, most aggressive, and most volume-intensive wave. For this reason, it holds a special place in the eyes of investors. This wave typically represents the dominant move that defines the primary trend. After the initial wave attracts early buyers and the second wave brings a corrective pullback, the third wave usually results in a market surge. In technical analysis, there are certain mathematical rules and expectations regarding this third wave. Using Fibonacci projections, the third wave is expected to travel at least 1/618 times the length of the first wave. This ratio represents the theoretical minimum. However, in many cases, this wave is even stronger and can extend up to the 272 level. In the current situation, it appears that the price has completed the first wave and formed the second wave with a short correction. Now, it is progressing within the third wave, making it very important to use Fibonacci projections to identify potential target zones. A rise to the 1618 level would fulfill the theory's basic expectation, while reaching the 272 level would provide a clearer indication of this wave's strength and the intensity of buying pressure in the market. Another key point to consider here is that the third wave should be supported by both price action and volume. This wave is often when major players, namely institutional investors, step in. If the current third wave carries the expected strength, it suggests widespread buying pressure and an overall optimistic outlook among investors. This could signal not only a short-term, but also a medium-term bullish trend. However, it must be remembered that while Elliott waves may seem theoretically flawless, wave formations in practice are not always clear-cut or smooth. Therefore, it is crucial for investors to support their Elliott wave analysis with other technical indicators. Furthermore, the fact that the price has not yet reached the 1618 level indicates that the third wave is still in its development phase. This suggests that the price could have significant upside potential in the coming days or even hours. If the third wave maintains its momentum, the 1618 and then the 272 Fibonacci projection levels will serve as potential technical targets. When these levels are reached, they should be closely monitored as profit-taking zones, since the completion of the third wave is typically followed by a fourth wave correction, which may lead to a temporary pullback in price. Therefore, we must patiently wait for the third wave to complete. Analysis of the RSI indicator reveals an important structure, a distinct falling trend line. This trend line indicates that RSI values are under downward pressure, making lower highs over time. This type of downtrend structure, especially in oscillators such as RSI, which measure investor psychology and the strength of momentum in the market, can be a harbinger of potential turning points, regardless of price movements. Because most of the time, even if the price displays an upward outlook, the suppression on the RSI side implies that the price has not yet reached enough internal strength to make a permanent breakout. However, a break of this falling trend line could indicate that a major shift is on the verge. Currently, the RSI indicator is once again close to this falling trend line, which it has already tested several times but failed to cross. This trend line acts as a kind of resistance, and as the RSI struggles to break through it, the price has been reluctant to make strong breakouts to the upside. But this time, the situation may be different from previous tests. The RSI has reached this level with stronger momentum, which technically increases the chances of a breakout. If the RSI manages to break above this falling trend line, this could be more than just a technical signal on the basis of the indicator, but a potential signal that could be directly reflected in price action. This possible breakout in the RSI is considered the classic momentum breakout in technical analysis. A momentum reversal usually leads to a reversal in prices. In particular, the RSI breaking the downtrend indicates that buyers are becoming stronger and the selling pressure on the market is starting to ease. After such a breakout, the RSI's persistence above the 50 level is very important for the sustainability of the uptrend, because this signals that the bulls have taken control of the overall structure of the market and the bullish trend is gaining strength. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.